30 minutes or so. We're also awaiting the HUL third quarter numbers, which should be out over the next 10 minutes or so, and we'll get you a quick analysis of that. Tarun Kataria, CEO at Religare Capital Markets, is with me to talk about some of those issues, those themes which are playing out. Tarun, good to see you.
Thank you. Good to be here.
Safe to say that, I mean, the rally, the last, actually the year so far comes as a breath of fresh air. I mean, people who are feeling crushed and squeezed and, I mean, finding it difficult to operate. This certainly is a relief.
Well, nothing like a start to a new calendar year to get you going. And I think, you know, over the time, the news around most of the large geographies around the world are generally more constructive than they were, let's say, in Q4 of calendar last year. I think, as you mentioned a second ago, the numbers coming out of the U.S., which I'd spoken about on the show 3 or 4 months ago, is looking a little bit more sustainable, and to see, you know, job growth accelerating, I think that's a great outcome. What that will serve to do is continue to drive consumer spending in the U.S., which I think, as we know, is two-thirds of U.S. GDP. So that looks constructive. I think there's a sort of a sense that even the housing markets, you know, well past its bottom. So the U.S. looking interesting. I think if you look at some of the numbers coming out of Europe, surprisingly, you know, some of the PMI numbers in France, in Germany, excuse me, seem to have bottomed and, you know, might be on an accelerated turn, just given, you know, what's happened to the currency. I think India also starting to look, certainly from an inflow perspective, from FIs, you know, looking very different than what it did all of last year. And I think we've had more in the last 5 weeks than we had, you know, for most of last year in terms of inflows. You mentioned China. I think China is an interesting story.
Tarun, I'm going to get to it. Yeah. So let's just start with the first one, because, I mean, US is seen as the big boy, which kind of will, I mean, if the rally continues, takes out its previous high, somebody was suggesting, I mean, that should spur a rally around the world as well. So let's just spend 2 minutes talking about the US recovery and how strong it is. I've got a chart which should come up on the screen. There you go. I don't know if you can see that, Tarun. That essentially is the S&P 500 and the US non-farm payrolls number. So the red one is the non-farm payrolls number. The blue line is the S&P 500. The S&P 500 is about 13-14% away from its life high. Take a look at where the jobs number is. The jobs addition number.
Yeah.
Way off.
Yeah. I mean, I can't see the chart, unfortunately. Yeah.
It essentially tells you, this is all the way from 2006 to now. Essentially, it tells you that jobs aren't coming back fast enough. That's what it essentially shows you. And it kind of shows you the divergence between what the stock market has been doing, which is being extremely strong, and the jobs number, which is kind of, I mean, nudging along. Sure, there's improvement and we can pay attention to it, but when you look at it in absolute terms, I mean, the difference is huge. So the question is, how much attention should we pay to these weekly numbers, these weekly job report numbers, and a couple of these weekly indicators, which have all started to turn positive over the last 2 months or so?
I think that's, Prashant, that's a good question to ask, but I think you'll find historically job creation tends to lag, you know, where the equity markets go. So I think the equity markets, as you know, are 12, 18-month sort of forward indicators of earnings, certainly. I think there's also a sense in the U.S. that, you know, the job losses have stopped, right? If the job losses have stopped, you'll find that, as I said a second ago, consumer spending starts to rise, in which case then the reinvestment by U.S. corps, which are so flush with cash right now, the reinvestment process should start, and therefore the job creation will start to accelerate, and that's what I'd like to think will happen in the months ahead.
So you're going with the rally, and I mean, you're a trusting person right now with this. I mean, everything is moved up, right? Some of the beaten down European markets have moved up, right?
Well, listen, the other thing to think, you're absolutely right. Pretty much all markets around the world, which took a heck of a bath last year, you know, are sort of headed back up north this year. And a lot of this, quite frankly, is also driven by global liquidity, right? So if you look at what the 6 large central banks have done over the last 3 years, they've bought back $10 trillion of bonds in their respective geographies. Now, that $10 trillion of money is sloshing around the global financial system, By definition, emerging markets are interesting. Some of the big US markets obviously would be interesting. So there's a bit of a liquidity-driven push upwards as well to the equity markets. But I suspect you have a bit of both happening here, liquidity and macro numbers looking a lot different than they looked 6 months ago. So I'd like to believe this is sustainable. Obviously, there'll be hiccups along the way, as there always is. But I think we're set, we're looking a lot different than we were some time ago.
Okay. The pictures on your screen right now are coming in from the Uninor press conference, which is going on, which is about to start actually right now. Let's cut across to it. Dip in for 2 minutes. We'll come back with
our spirit.
Welcome to the big picture. That Uninor press conference still on. We'll cut back to it as and when required. Tarun Kataria is with us. Tarun, apologies to have kept you waiting. That's a raging issue. I mean, will the decision by the Supreme Court affect foreign investment in future cases into the country? But that's for another time. Right now, I want to focus back on the market for a bit. I've got a chart here which basically, puts into perspective what has happened over the last 1.5 years or so. This is a channel which has stayed relevant, which has stayed active over the last 1.5 years, all the way from November 2010. This is a weekly chart. And it shows you that the market on the Nifty has just about taken it out on the upside. It's broken out above the downward sloping trend line, perhaps for the first time since November 2010 when it sort of topped out. So the question, Tarun, to you is, does this look like it might run all the way, another 15%, 20%, take out the previous high? Do we do that? And what are the, just put some odds to it. Because I guess that will determine how you want to play it, which is the other point I'm coming to.
I think there are 3 parts to this. One is just the weight of money, right? So I think, as we've said before, in fact, in all emerging markets, including India, FII flows, drive markets higher or lower, as the case may be. And we're starting to see a bunch of FII flows come into India. So if that continues, I think this market continues to run. The other thing that's driving it is a sense that interest rates will start to be cut, and perhaps cut a bit aggressively. And I think that, as we've also discussed before, takes the banks higher, takes the NBFCs higher, and then sort of takes the market higher with you. I suspect there's a bit of risk to that because people are now pricing in stuff that, to my mind, certainly is very aggressive in terms of rate cuts. So I'd be, somewhat cautious on that. The other thing that's driving India is obviously a sense that, what will happen in the elections will allow the government at the center to initiate a process of reforms, which I think we've all been clamoring for. So there are 3 things driving this market higher, and from the stuff that I read, and certainly from the messages that we've got from our political analyst who's just come from the UP, is that there's a fair chance that would happen. So you've got 2 of 3 that look reasonably good, and if there's a small rate cut, that's great. The risk, as I say, if they don't cut rates or delay it a little bit, there will be some pressure on the markets. But on balance, I think it's probably headed higher.
Hope of rate cuts is not enough. You need to see action and strong action from the RBI by way of cutting rates over the next 2 months. Is that what you're saying?
No, I think the market, some participants in the market are now talking about 200 basis point rate cut during the course of next fiscal. I think that's very aggressive. Most participants are saying 100 and 150 in the next 12 months, including cuts in March of this year. I'm suggesting that I don't think it's that straightforward, because I don't think there's a sustainable decline in inflation as, for example, we've seen in China. And at the same time, during this sort of the last 6 months, consumption has remained unabated, has been very strong. Industrial production we've seen has come down pretty dramatically over the last 6 months. Think about it, that's inflationary, right? So for the Fed for the RBI to cut in March and then realize in June or July, oh my God, this mismatch is actually creating another round of inflation, it can't look very good. So I think they'll be very cautious, and the market needs to probably think about that a little bit. That's all I'm suggesting.
All right, so I'm just running shorter on time, so I'm going to get straight to the last question, which is, if you think this one's got legs and it'll run, how do you play this?
I think you buy you buy the market, you buy the mid caps have had a heck of a run the last 2-3 weeks. I think they're probably set for some more of a run, and frankly, you buy it through the funds, you buy it through, as we've said today, we picked 10 sort of key mid cap names that I think, will power this market higher over certainly for the next 3, 4, 5 weeks.
Did you say 10 mid caps, Tarun?
We've picked 10 sort of core mid-cap names, a Yes Bank, a Crompton Greaves, a Marico, those types of names that I think we're continue to be very constructive on.
Okay, all right. Tarun Kataria, thanks very much for your time. I'm sorry, squeezed in a little bit, but good to have you with us in the show. Hope to see more of you here on Profit. That's a wrap here on this edition of The Big Picture. The market's got about 40 points or so, 5363, 110 on the Sensex, 17,713. Thanks for watching. Power Lunch comes up next.